Hi, I hope you're doing great. A small video to let you know how it was possible to take advantage of the 5th of July. I hope that will be a fast and informative video for you. So let's go straight to the point. What you are seeing right now is the dollar currency. Um, as it is a dollar currency, it's called the baskets of the dollar. It's on the broker FXCM that it's possible to have the baskets of the dollar. Um, it's a melting pot of every uh, Forex against the dollar, but only in showing informations about the dollar. So it's a great tool for you to take the right informations. What you see in blue are the US session, what you see in red are the UK sessions, what you see in green are the Asian sessions. Right now you are right in a Asian session, but what I will talk about is about the 5th of July, so yesterday. What you can see in aqua color are the maximums volumes of transactions per price. So you see it's a straight line here, line here. What I will do, I will add horizontal lines directly. So you will have a better view of what happened. Perfect. And as you can see, where the market bounce or was locked as support or resistance are directly the prices where the maximum of transactions occurred. So it's really important for me to show these informations because most of the time in trading, um, the informations that are shared are informations that are not that relevant or not more relevant than the transactions. And the maximum volume of transactions is really the main information that you will need because it's really showing you where the big guys are buying, selling, and are doing most of the transactions. So what you will have to do is to look for ways to see the maximum of transactions and also to read the market to know which kind of transactions were made during those prices. Um, as you can see here, the previous highest price was from the 5th, 1, 2, 3 days before. And you see that it was a higher high, and then you see that this higher high wasn't changed so far. So as you probably know, when a market is going down, the pattern is a higher high, then a low, then a high, which is not higher than the higher high, then a lower low, then another high, then a lower low. So this is definitely a trend going down. Now a trend going up is a lower low, a high, sorry, a higher high for a market going up, sorry, it's a lower low, a high, a low, and a higher high when the market is supposed to go up. It is always that happens in any market. So in this situation, having the informations about the maximum transactions, you can have the informations that during those prices something will happen. Then that is the first way to read it. Now the second way is a more personal way to me. I have levels that I've created which permits me to know where the market is heading, where is the best price to open a trade, and when is the best price to close a trade, and also when the price are here to close a trades, most of the time they are the best place to take the trades the other way. But now it's not a matter to, how can I say that? There is no real places where you can say that the market will go a way or another. It's really always up to your way to read and up to your way to understand. As you can know, investment is a kind of risk that you take. That's why when you take a trade, you definitely have to look for ways to gain the most, and if you lose, to lose the less. So, how can I read with my own levels? I've created my own levels, and what I do, I will only look for the market going down and to see if the movement going down might be over. To do so, what I do is that I take the biggest movement leading to the highest price that I see, and I place my Fibo on it. So as you can see, that will be from the maximum volume price. It's not a coincidence, and then to the highest price. Then you can see all my levels. Alpha represents the place where the price, sorry, where it's possible to take a trade. In this case, is a trade going down. Confirmation of trend is a price to confirm the trend or the way the market is going. And A, B, C, and our other levels are the levels where the take profits can occur. And when these prices are reached, it is a confirmation to me or a possibility for me to know that the market can go the other way. So when I look at this day here, when I was at the situation when the market at the US session went down, I looked at it as the maximum of volume price was reached, but also that the my take profits here were taken, and also that this movement might be a movement going up as the lowest low wasn't reached and at another time. So I had to look at, after believing or noticing that the market going down might be over, I just do the same thing, place my levels here on the biggest movement leading to the lowest price that I see. And then I can see that in the same zone of the maximum volume price here is my level where it's possible for me to take a trade. So I definitely knew that this price was very important, as the price of the maximum volume were at 12,880, and I can see that the price where I can take my trade was at 11,879. So I definitely knew that it was a great place to take to place a trade for US to go up, dollar to go up. Now, knowing this information, I could face all other pairs trading the dollar. So I was expecting the dollar to go up. So in this case, I am expecting then Euro with USD to go down. So let's take the real time where it was possible to take a trade. It was around, yes, 1625. So it was at this price during this candle here. but it was possible to take the opportunity in those candles here. So it was yes, at 16.25 around this price. Let's say 16.25. Okay. So at 16.25, I was expecting the dollar to go up. So I was expecting Euro USD to go down. Look, at the same time, 16.25, it was possible to take a trade. Now, if I break down the same thing that I told you, as I'm looking for the market to go down, what do? I look for the previous high that I see, but directly in the day, because this one was already a movement. So I only have to take this one in this case, as it was the same price as this one, and to place my levels here. Okay, and as you can see, at 16.25, I was already at the levels to take my trade. So it was a perfect timing to me. And I can see that the market did not went above this price. So it was really an easy trade to take. Then I only had to wait for 5, 10, 15 minutes, and then the market went on my favor, and then it went down all the way. So, as said previously, I was waiting for the dollar to go up, so I was expecting the Euro USD to go down. So the dollar to be stronger than the Euro USD, and it is exactly what happened. Then I also took on the same time a trade on GBP USD. Let me go at the same time. It was at 16.25. Okay. Same thing. What do? I look to the previous high. And what also I like to do is to look at the maximum volume of transactions here. Because what happened? Here at um, 16.25, I've seen that the market went down. It's okay. But during all this period here, without having the perfect timing, I had also to see what was the maximum volume price reached here. To tell the truth, I was looking at the baskets um, of GBP, and on GBP, I was also on a reversal, but only to break you down in the simplest way. I was looking at the maximum volume price, which was at this level here, and I was expecting the market to go the other way. So what I had to do was only to wait. What can help you to wait the most is in having an eye on the maximum volume prices, because these are the levels where there were the maximum of transactions. These are the real informations. So even if I had the information that the dollar might go up, I was also looking at how the market would react, and how the market would react around the maximum of transactions. So at 16.25, also took my trade during this candle here, and I was patiently waiting in my favor, then went back when I saw that it wasn't really some huge movement. So it was really easy. So I had to wait a little more than Euro USD, and then I had to wait. And if I had to place my FIBO levels, I should have placed them like that to take a trade a bit later. But what I've done is two ways. It's either you take your trade here and you wait for the market to how it reacts, and then you keep charging other trades, or you take your trade here and you wait. That's why you really have to have a great model management, so that even if the market don't go in your favor, you still have space to for the market to kind of fake the other way around, knowing that the real information that you are looking at is the maximum volume transactions that you know, which is at this price. And then, as expected, the market went the other way as the dollar went up, so GBP USD went down. And also, another trade that I took this day, I will just create something as easy. I did prefer to take only 3 trades in having the informations. So it was at 1625 again. Okay. So I was also expecting the dollar to go high against GBP GPY, against GPY, sorry. So at this price here, I was looking for the USD to go up. And again, what I had to do is really I had to wait for the right time and to take the right amount so that even if the market doesn't go in my favor at first, I only have to wait as I was kind of sure that the dollar would go up. So as I took 3 trades, sometimes it went in negative sides and so on, but I was confident in my strategy as I was really ahead with Euro USD and GBP USD. And so I only had to wait a little more with GPY, sorry, but it's really something that helped me. And if I have to place my Fibon levels here, so in this case, I am, it's based on experience, but I prefer to place my levels here until the lowest low, sorry. So from this price to the lowest low to have a better view of what's happening. It's based on experience because it's only that I was expecting to take the right information as fast as possible, and knowing that if I take this high here, this high was ending with the movement this way, and as there were another high which wasn't the highest, I do prefer to take decisions based on the previous high to have a clue about what's happening based on this movement and not based on this movement is my way of thinking. So at this price was the best way to take the trade, as you can see, and the market in terms of candlestick answered to this, and then as you can see this candlestick here just here and went the old way, then went above the confirmation of trend price, then rebounded against it and went to my first take profit, and that was it. So here is the way that you could use to take advantage of the 5th of July. It's really simple. It's really based on reading the maximum of volume price and having an overview of what the currency is doing. Is the previous movement over or not? And if yes, when is beginning the next move that I'm willing to see? And based on that, to wait, for example, as in GBP USD, for the market to reach at least a maximum volume price previously reached, so that I can save that as informations to just keep it safe. I hope that this helped you. If you are willing to have some more information about which are those levels, or if you want to have some ways to look at the market, don't hesitate to let me know. I will definitely put in the description infos, to have my trading robust or else, feel free to contact me if you want. And I really hope that this video has helped you. So I wish you a good day and I wish you a good trading month. Ciao, ciao, goodbye.